All right, guys, welcome back from another episode of Nothing to Profitable in 20 Singular Days. We're starting from episode 1 and going all the way to episode 6 now. We're showing everything in one video, rarely giving you any cuts, showing you raw footage of what exactly I want to see what happen in the market every single day. So you guys can get a grasp on this, basically breaking out every single concept and giving you guys a chance to learn everything combined together. This is probably going to be your biggest yet most valuable lesson on this series. One of the biggest videos I've actually ever posted. This is basically showing not my exact strategy, but what I look for in the market every single day. So pay attention. 95% of traders don't lose because they're wrong. They lose because they're early. In these confluences and setups I'm about to show you guys, you're going to want to be the most patient you have ever had in your whole life, and you're going to be waiting for the most possible last setup to see most A+ setup. I know this sounds really weird, but you're not going to want to trade the first 15 minutes. You're going to wait for the manipulation lag to actually happen. All right, let's stop yapping. Let's get into this. So what you're going to be looking for when you log into the charts is you're going to be looking for where is my draw on liquidity. First thing I like to do when hopping on the charts is go into the highest time frame possible, so daily, and then work my way down from the daily, 4 hour, 1 hour, etc. So in this case scenario, I'm going to be starting on the 4 hour. We're marking out our swing lows, which is our common use on draws on liquidity, and we're marking out our swing highs as well. So clearly, as you can tell, we have this huge displacement candle. So if we're trading into intraday, so trading in the same day we are now, we're going to be looking for probably sells into draws on liquidity. So we'll take our swing lows, swing lows, swing lows. Perfect. Boom. So now what we're going to be looking for is our draws on liquidity, where we're going to watch price either continue or reverse. All right, next thing we're going to do is we're going to find our high time frame for our value gaps, which is another source of or kind of draw on liquidity, because those could be reversal points or continuation points if price respects a fair value gaps or inverses a fair value gap. Huge thing to know here, I am not going to be trading once market opens if none of these areas get hit. If none a swing high or swing low, or even if we don't tap into this fair value gap and we just kind of go all over the place, I'm not going to be trading no matter what, because in this case, this is called dead or no man's land, dead man's land, or whatever you want to call it, no man's land. Price can reverse at any time or continue at any time, so you don't really know where the drawn liquidity is actually going to be targeted after that. So if you're trying to enter a trade in this, you could easily get stop hunted or get lucky, I guess, and hit TP. But in this case scenario, you do not want to trade if none of those areas, like your swing lows or swing highs or fair value gaps, get hit. So let's pretend we're trading. I'm going to start the replay on this. Let's pretend we're trading. Let these 1 hour candles go by. Boom, 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 boom. Okay, boom. Our swing lows got hit. Perfect. As you can tell, our swing lows got hit, and we got a little bit of a reaction. We got the push up. We got a little bit of reaction. Perfect. Boom. We'll keep letting it go. We don't see any entry points. We see continuation. Whatever. Boom. Keep it letting it go here. Boom. You see a bit of a V-shaped recovery, but overall, with this 4 hour displacement candle, you're always going to get higher time frame bias. So as we keep going on the higher time frame, as you can tell, as we're trending down, we're respecting bearish order flow. So what we want to see now, respecting bearish order flow, you want to see us hop into either sells. So you want to see either continuation sells or reversal to sells. So let's just keep letting this play out. Obviously, you're going to want to trade with the trend. So let's just keep letting this play out. Boom. Keep respecting bearish order flow, which is perfect. As you can tell, we bounced off of this 1 hour candle again, 1 hour for value gap, perfectly bounced off and continuing down in that same direction. You see we take out this liquidity again, and you see that bit of a reversal, which is good. We're taking out liquidity, but overall we keep pushing down, which is holding that bearish order flow. So now we're pushing down. Let's see if our last drawn liquidity will get hit. Let's keep letting it go. Pretty close. Let's keep letting it go. And boom. See, our last drawn liquidity gets hit. Now, this is very, very crucial into what we want to be trading now. So as we see our last draw on liquidity get hit, this is the last swing low in that downtrend trade. So now we are going to be looking for a reversal. So in this case scenario, we swept liquidity. We swept all of this low resistance liquidity. This is low resistance because we're inside of this trend. This is going to be high resistance because it's the last candle that you actually have that, say, orders for banks or orders for stops, stuff like that. So if I let this play out a bit, as you can tell, we swept the huge draw on liquidity, and we've also created this huge rejection block. So if I take our rejection block that you've seen in our last video, I think it was last video, last video, episode 6, rejection blocks. As you can tell, we take the body of the candle all the way down to the wick, and we take this all the way across. As you can tell, there's a perfect tap into the rejection block, meaning, okay, we don't want to continue lower. We've already grabbed the liquidity we needed, and now the rejection block is actually taking us higher, which is actually comes to our next concept, which we're breaking structure. So breaking above this last swing high, which is actually creating bullish order flow, which now we can actually look for a trend higher. Also, if you look really, really closely, you can tell that we're inside of this huge 1 hour for value gap. So we've created actually a lot of wicks here, plus accumulation. So we're accumulating inside of this 1 hour for value gap, which is helping us with our bias, as well as we came down to tap into that rejection block, which is actually another confluence we can add and saying, okay, price wants to continue higher. So bang, we've taken out liquidity, we've tapped into the rejection block, confirming higher bias, and we're respecting a high time frame for value gap. Next thing we want to look for is a for value gap or inverse for value gap entry to then push price higher. We have a lot of generated high resistance liquidity up here, so we have lots of draws to be targeting. You can target here, here, and here. So TP1, TP2, and TP3 for farther reversals. And don't get me wrong, I forgot to cover this. As these are getting hit, yeah, you can take little scalps off of this, so you can be entering trades up to here, up to these swing highs and stuff like that. But we're waiting for that actual huge move where it makes us want to target all of these, right? So we're not scalpers, so we don't really care about these little moves up here. Like I said, in this setups, in these confluences, you want to be patient. You want to be waiting for that last, most A+. Okay, this is hitting 90% of the time, right? You only want to take those A+ trades every single time. Okay, boom, we have our 1 hour for value gap, rejection block, and liquidity sweep from this low. All we're going to do now is we're going to scale down to the lower time frame, and we're going to be looking for some sort of 15-minute or 5-minute continuation trend. If I bring this back a bit more here, as you can tell, here, let's see, let's do it here. As you can tell, we got this a little bit of accumulation over on the 15-minute time frame. So a bit of accumulation, and we got this manipulation right here, which broke out of this structure, but is actually manipulated into this rejection block. So now really what we're going to be looking for is that for value gap or inverse for value gap to target our huge draws on liquidity we have higher, right? So now we have a rejection block, 1 hour for value gap, liquidity sweep. Now we're looking for that entry. So usually I want to be on either the 15-minute or 5-minute, stuff like that, looking for any sort of inverse for value gap. Here, I would probably be really confident in taking this inverse for value gap just because we got that retest of that rejection block. But if you guys wanted to be safe, you could probably just get away with taking, if I play this a little bit more, there's going to be 15-minute inverse. Yeah, if you wanted to play this safe, you could take the 15-minute inverse or the retest of this for value gap. So all I would do here now is I have this high time frame confirmation. I'd be taking it on the lower time frame. All I would do is I would wait for that close. So we put a long position here, wait for that close. You could either run this on this rejection block protected low because it's already tapped into that rejection block, or depending what your risk is, you could run that on that full protected low. So now we're targeting on the draws on liquidity that we've made. So boom, draw on liquidity, boom, draw on liquidity, and boom, equal highs. So equal highs is a huge draw on liquidity as well, because that, you know, that price is resisting off here. So here we have equal highs at these areas, and then we have kind of swing highs that are draws on liquidity for orders getting filled. So now we extend our take profit, take 1, take 2, and then full take profit would probably be up here. You don't want to go too high, just because there is that chance, since we're in that downtrend, that we could fully reverse back down. So here that we got that huge liquidity sweep. Another thing you guys can add into your thing is equilibrium as well, but we'll cover that in a different episode. It's fine for now. But yeah, you'd have your entry right on that candle closure of that 15-minute inverse, or that retest. You'd have stops below that swing low. And then honestly, you would probably just let this play out. Honestly, like, I'm fine with that 15-minute candle closure. I'm fine with that 5-minute candle closure. Anything that really works there, I'm fine with. See, as you can tell, we have that first draw on liquidity that gets hit. If we keep extending this, let's see. Boom, almost second draw on liquidity. Second draw on liquidity gets hit. And then ultimately, let's see if this goes. So close, so close. Boom, and then ultimately our last draw on liquidity, which is here. And yes, this is the 15-minute time frame, but if you scroll down to the 5-minute as well, you could be taking off your positions at any of these swing highs, depending what your risk is. I'm just showing you guys it works on the higher time frame as well. So you could be taking off positions here as well for a 1-to-1 or 1-to-2 at this position. Doesn't really matter where you scale off the positions. It just matters that this worked perfectly into our favor using all of our confluences. And this played out perfectly for a 2 to 1.8 risk reward. So stops at this swing low would probably be your best bet, just in case this got swept and then, reverse into your position, because that happens all the time. You'll get taken out and then it will go fully into your take profit. So if you wanted it here, just depending on your risk, then sure. But here would ultimately be the best option, where if it does pass this line, you know that the trend is going to be lower and that your bias was just wrong for the day, right? Obviously, it's easier said than done. I'm in replay mode, obviously, but these are setups that form every single day. Once you see liquidity sweep happen and the displacement off of it, you can ultimately kind of put your confluences together. But the first thing you want to wait for is that liquidity sweep, because that liquidity sweep is going to determine either we continue or reverse. Like I said, you don't want to be entering in no man's land or dead man's land, because you don't know where price is trying to target. So if you first wait for that liquidity sweep of either your session highs or swing highs and lows, you're going to know where price kind of wants to target, right? So you can go off there based off, okay, if we're rejecting off a 1 hour for value gap, we have this rejection block here and we just swept liquidity, chances are we're going to be pushing up to the buy side liquidity, right? So you can kind of put your confluence together and kind of show based off of that. But yeah, guys, that's going to conclude episode 7 of Nothing to Profitable in 20 Days. This is probably the most valuable episode you will ever get, or in this series right at the moment. I'm going to be covering a couple more confluences, a couple more things that you guys can work with, but it's not going to be as valuable as guys showing you what exactly happens in the real market. So I hope you guys enjoyed, and like and comment. I'll be dropping more videos in the future. Comment what you guys want to see next, and tune into my Instagram reels as well, where I show you guys a lot of sauce in those. So peace out, and I'll guys see you in the next video. Peace.